Hey everybody, this is Jose Blasco. How are you everyone? Ready to get started? I am in 40 seconds. Let's use this time to have a quick sound check, if that's okay. If you could type on the chat box, hello, then I would know that you hear me well and you're ready to get started. So please do that. So I know sound is good. Thank you so much. Should be, but always good to confirm. Thanks a lot. 21 seconds to. Okay, almost there. 10 seconds to go. This is great. Almost ready to begin. That's it. Top of the hour. Time to get started. Let's begin, everybody. How are you, Joe? How are you, everyone? Today is September 18, 2022. My name is Jose Blasco. I will be taking care of the session today, and the session today is a top trading session. So top, in case you do not know, I would assume that the ones of you attending live, of course, you know, but for the ones of you attending this recorded, so in case you don't know, top is our predictive options planner. Top stands for predictive options planner, which is our very advanced trading platform for options. You could trade anything with it, really, but really the key is options, if you wish. And in this session, we go over the use of it, and many times, of course, we need to get into talking about trading and specific lectures to be able to discuss software functionalities. Before we get started, I would like to highlight our financial disclaimer on the upper left side of the screen. Please read it carefully. This is important information. Read it completely. It is fairly short, and therefore I'm counting on you all to read it fully. Thank you so much. The session for today, the agenda, as I said, we're going to go over platform features and how to use it. But often we need to combine those use of the software lessons with trading lessons, because we cannot separate one thing from the other, isn't it? So that makes these top sessions often quite enriching. Having said that, I welcome any sort of question you may have, especially if it's obviously related to the platform. But again, if you have any question, you can throw it at me, and certainly I will try to make time to address it. Okay, so thank you so much for that. Jeff, good to see you as well, everyone. So let's begin. Cool. Okay, so what do we have here? Top. This is our platform. We have been looking at all the various features here available on the left, the chart, the quote, the matrix, the chain, and more. Today, I would like to have a stop on the group tool, which is a tool which, to be honest, is extremely powerful, and we never had the opportunity to discuss it properly in depth, which is what I'm going to do today. Okay, and depending on how much time we use, we may address another tool as well. But for now, let's put our 100% focus on the group rotation tool, which you probably also remember that then you can do searches, real-time searches using the matrix, which we covered already in the past, where you can come here and do certain searches based on sector rotation, group rotation, etc., etc. Okay, so I will not address that on the matrix today because we already covered it in prior sessions. But when it comes to understanding the group tool itself, let's dive deep into it. So notice that when we load this tool, again, I'm just gonna close it and reopen it like I never opened it before. So notice that the moment I open it, I am presented with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 boxes, which if you ignore the one on the left, okay, basically we are talking about 10 sectors. Okay, utilities, telecommunications, technology, oil and gas, industrials, healthcare, financial, consumer services, consumer goods, and basic materials. Why did I ignore the box on the left? Because the box on the left is the whole market overall, is the US market, right? So all stocks in the US market. So the boxes on the right, they are basically looking at specific stocks that belong to those groups, where the box on the very left is looking at the whole market overall. Those boxes are clickable. This is the first thing I would like to show here, is that you could actually click on them. Okay, of course, if I click on the US stocks, nothing's going to happen because everything starts from there. It's kind of like the source. But for example, if I was to click on basic materials, notice how from basic materials, I now go inside that sector And now I can look at the groups, right? I can look at the group chemical manufacturing, in this case, forestry and paper, general mining, gold and silver, and iron and steel. So notice that, those boxes are clickable. And again, if I was to pick another one, for example, in this case, iron and steel, and I was to double click on it, so guess what? Now I am being presented with stocks, specific stocks that belong to that group, that belong to that sector, that belong to the US market, right? So we can see stocks like ATI, MT, CRS, etc., etc. And you can see all those stocks here, which I'm going to come back to that in a moment. Okay, but the first thing I wanted to do, go back to the first view we had. The first thing I wanted to do is to make you aware that while we have 10 sectors, every one of those 10 boxes are clickable. You get then inside the sector, get a view of the groups, and then you click on the groups and you get a view of the stocks within the group. Okay, so that was the first comment I wanted to make. So this is known. How are you, Mark? Good to see you. Now, what else? Well, notice that there are a few conditions here. For example, the fact that here I got selected 10 days. So if you zoom in into any of those boxes and you count the amount of bars, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the 10 bars that we got there on that box, or any of the boxes, corresponds with 10 days. If instead of 10 I was to choose 30, so notice how the length of each box becomes greater, because now the measurements, the visuals that we get represent 10 days of trading. So this will obviously have an impact on what we will do later, as you will see. Okay, so I'm going to go back to 10. This, of course, would depend on what is it that you're trying to do. This approach could be more or less useful, and you'll see that in a moment. Then the spacing is basically just a visual representation that makes your boxes to be a bit larger or smaller. So this is just something that is less relevant, but certainly nice to have. And then the minimum price has to do with the stocks within the industry. So if I load stocks, 0 or more, right? So you may feel that, oh, it's the same. Yeah, well, not exactly. If I get into basic materials and then I get into, forestry and paper, for example, so you're going to have this particular list of stock where if instead of minimum price 0, I was to make minimum price 100, so now notice how no stocks are trading at 100 or more. So, you are basically limiting, you are filtering out the following views when you get into the stock view based on the prices of the stocks that are part of the group. So by definition or by default, it comes with $5 per share. That I would say it's really a minimum. If a stock is trading at less than $5 a share, I guess it's kind of like the stock is an option instead of the stock is a stock, right? So again, fair enough. There are certainly very good companies that will someday become amazing, and today they are trading under 5. But certainly, if you are looking at the markets today, I would say less than 5 is probably very not relevant. Again, all of those parameters are to be set based on your preferences, trading plan rules, etc. Okay, and then finally, let me go back to US stocks. So finally, the next box for you to check or uncheck, by default it comes as uncheck, is the long trend, where if I click on it, I now get a box under my box, right? So I get basically 2 rows of indications, where the one above, okay, is based on a daily time frame. Okay, so you may want to think about it as a midterm, where the one below is based on a weekly time frame and and therefore you may want to think about it as a long-term thing. So you can see, for example, how certain stocks may show, either red on the midterm and red on the long term, where I said stocks, sorry for that, I meant sectors, where other sectors may show blue and, not really blue, but kind of neutral, or blue and blue, or maybe blue and red, and any other combination you could imagine. So, of course, when you are looking at the markets from a longer-term perspective or a midterm perspective, obviously, the indications that you're going to get, the readings that you're going to get are going to vary, And again, it depends on your trading plan and your preferences and how you wanna use this. For example, let's say you are looking to buy stocks that are very, 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 very cheap. So maybe you are actually appreciating looking into telecommunications, because both in the midterm and the long term, that industry has been hurt pretty badly, and you may trade in a way where you're trying to fish very low price point stocks. Maybe you are actually even looking at fundamentals and you identify certain companies that you believe are good for the future, but you want to buy them when they're very, very cheap. And that's that group, that sector and group, telecommunications, will probably be the ones that allow you to find these type of opportunities, because that sector has been totally destroyed. Now, having said that, of course, because the sector is badly hurt, obviously it may continue going down, because obviously the trends are to the downside. Okay, looking at classical technical analysis, when a trend is down, it tends to continue going down. So maybe your trading plan is the complete opposite. Your trading plan says, no, I don't to buy stocks, I need to see blue and blue, right? Or maybe you are more looking at you want to see blue on the long term, okay? And you just want to see, for example, that you have blue on the long term here on industrials, and you can see how the red on the midterm is going up. So you may be looking at a rotation, which is when it goes from red to blue, okay? And you may be observing this particular industrial group, looking for opportunities in it, because if that crosses to blue, since it's blue long term and is now becoming blue midterm, your trading plan may be looking at opportunities of that sort, expecting very powerful continuations to the upside, because the long term is a supporting condition to momentum that is building up on the daily time frame, which is the midterm, and you are looking for that strong framework with a momentum in the midterm and take advantage of that. So again, and any other combination, really, I'm giving you multiple ideas. Some are better than others, really, depending on the trader's plan. But I'm giving you multiple ideas just to get you thinking about possible uses of this particular tool. Also, because later with the matrix, you can scan for it, isn't it? So certainly those conditions could be useful. Okay. Okay. So now, again, you can be looking at all that information I showed you. You can be looking at it today, current. This is the typical application of it. Okay, but you may also want to look at it from a different date point of view, depending again on what is it that you're trying to do, what is your your plan for trading, or maybe you are looking at certain confirmations, right? So, for example, if we look at, let me bring a website here very quickly. So if I bring fxtrade.com, okay, and continue to site. Okay, very good. So I'm in a private window, so I'm not logged in. Okay, so I'm looking at this information as raw. And if I go to economic calendar, okay, and maybe I look at this month, and I'm looking at this month. Yeah, filter, and I also want to look at United States only. Okay, and I want to look at high impact events only. Okay, and apply filter. Okay, so when I do that, so I'm looking now at the whole month of September and what was very, very impactful during the month. So maybe you're looking at this, okay, and I'm just looking at, yeah. Yeah, 21st, the event I was looking for is the Fed interest rate decision. Obviously, I looked at this month. This is going to happen on the 21st. So let me go back to the prior month. Okay, apply. So we can see the date of the interest rate release. Okay, where is it? Interesting. For whatever reason, I don't see it now. How can that be? Let me go back to the filter. Sorry for that. This should be an easy one. For whatever reason, maybe I'm just not looking at the right thing here, but for whatever reason, I should be able to see. Yeah, let me activate medium just in case as well, and apply filter again. So where is the Fed? Okay. Let me search for Fed. Fed. Okay, so my friends, I don't get it. I don't understand why I don't see the Fed interest rates. Okay, I'm not sure what is it I'm doing wrong. So let me go back to set dates manually. Then I'm gonna try July to see if I can see there. Maybe there is an issue with the data on this website. Could be. Okay, so apply filter. Okay, so this should be July. Wow, this is okay. Let me do it, guys. Sorry, bear with me with that. Normally, I would be able to do that way faster. I'm not sure what's happening today. Okay, so looking at the Fed. Okay, so Fed interest rate decision. Okay, that was July 27. Okay, so this is what I'm looking for. So I'm looking at this particular event because obviously this is something critical at this moment in time in the markets, right? Or at least everybody talks about it, and certainly it's a very big change that have not happened in the markets for since 2008, right? Since the last financial crisis, the Fed has been basically keeping the rates at zero. So this is certainly very relevant. Okay, but again, it could be any other thing. It could be an unemployment number, which is a number that is reported on the first Friday every month. So anything that is, let's say, relevant to you, you may want to start measuring parameters of this sort using on that date. So we just saw that July 27 was a key date for that. So let's say we want to go back to July 27, and when I said that, all the data is now being reloaded, okay? And we get to see what was happening at that moment in time. So again, this going back in time, this type of historical approach to understanding that could be very, very useful. Okay, could be very, very useful to understand or measure the impact of certain news when it comes to which sector is impacting and so on, and maybe boost a little bit the confidence level of a trader when planning on a trade, depending on the type of trade, the type of investment that you want to do. Okay, so just a little bit of food for thought there. Even though I kind of got stuck there with the calendar, I wanted to do this a bit quicker. But anyway, so just for you to play with it, to think about this concept, which could be relevant, just to understand if there is an impact of any fundamental piece of information in the marketplace, where is the impact happening and how? And you can see it from in the form of sector rotation or group rotation, both. And from there, you can basically try to play it smart from a positioning, from a selection of stocks to align yourself with what's happening in the market, okay? So I'm going to go back to today, which is the normal approach. The normal use of the tool is use current, because normally when we trade, you want to measure what's happening in the now. But again, you have other ways to look at it as well, okay? Good. Okay, so what else? Well, you have a few buttons here that you could use to organize the information on your screen, okay? So symbol and name, that's, I guess, is pretty self-explanatory. If you click on symbol, so it's just gonna sort based on the alphabetical order, if you wish, because in this case, it's just the sectors. So it's just gonna go symbol and name is basically gonna do the same thing, just because it happens to be the sectors. But then when you get into any of the sector and you get into any of the groups and you start getting stocks, well, obviously the symbols of those stocks may not coincide with their names. So then you may decide to sort the information based on the symbol, based on the name, if that was to be your preference, okay? I would say those two buttons are there because I guess it makes sense for them to be there. But probably from a technical analysis or from a planning point of view for a trader, doesn't provide any real, anything that is that significantly impactful, right? Now, the two buttons on the right, which is rotation of strength, those buttons do have a big impact, okay? Why? because I would say, even though there are many different ways on how to use this tool, I would say that there are two main ways to think about it when you start using the tool. One is look for a certain condition when it comes to the strength of a group or sector and plan trades out of relying on that strength. Okay. Another condition is more on momentum instead of strength. Strength is kind of like a trend, if you wish. So it's kind of like something that tends to happen continuously, and you want to rely yourself on that to enter new positions. Okay, so that would be strength. Rotation is more a momentum condition. Rotation is when a sector or group was blue and become red, or was red and becomes blue. So there is a new directional energy that is being deployed at this moment in time that is powerful enough to change red into blue or blue into red. And therefore, I'm using the word momentum here to represent that market condition. And you may be looking for that. Okay, so I would say, for traders looking into longer duration trades, probably sorting this based on strength is a smart thing to do. So notice how oil and gas, lots of blue there, right? And by the way, when you sort based on strength, it's sorting based on the upper. Okay, as you can see. So and so again, lots of blue here on the left, lots of red here on the right, right? So if I sort it in the opposite direction, so you have red here, but here telecommunications, both midterm and long term is red. Okay, so notice how the sorting is happening on the upper row, which is the midterm. Okay, so again, the only thing you're doing here is to look for that. Now, if we are looking for rotation, okay, and you sort based on rotation, so notice how that one is the one that comes first in the list, which has not rotated yet, but is the closer to rotation. In this case, rotating down because it's coming from blue. So if rotation takes place, it's going to be going down. Okay. Yeah, and all the other ones, to be honest, today is not the best day. Let me pick a past date to see if we're a bit luckier with what we get. And now about the same. Let me get another date just to see if we're lucky, and then we have a few more rotations. So for example, if I look at this, okay, and I was to sort based on rotation, one more time. So notice how, for example, here basic materials rotated 2 days ago, 3 days ago, 3 days ago, 4 days ago, 4 days ago, 5 days ago. So you can see in this case how the rotation didn't happen too long ago, meaning it happened with 10 days or less, which is the parameter we have here. So now we can see an example on how this is being sorted. The stocks that rotated the most recently are showing on the left. The stocks that rotated the longest ago are showing on the right. And if I hit rotation again, the opposite is true. The stocks that rotated the longest ago are on the left, and the stocks that rotated the most recently are on the right. But here you can see the effect. If I go back to today, again, because everything rotated, a long time ago, if you wish, apart from the stock on the left, sorry, not the stock, the utilities sector on the left. So that's why, in this particular case, sorting based on rotation doesn't provide a great advantage. But again, if you are a trader looking for momentum opportunities, right, and you see, for example, utilities rotating or about to rotate, and you enter utilities to see the groups, right? And you sort again based on rotation opportunities, and you get to see that, again, yes, Joe, I see your question there about the criteria. I'm coming back to you on that, because to be honest, for rotation and for strength, the criteria is the same. So you will see that in a moment. But again, you can see how electric utilities is getting very close to rotate, a clear movement to the downside on the strength. Here, this thing is kind of flat. And this one it was down already, but it's going down a bit further. So, which explains why the utilities sector is looking like that, where the groups inside are doing this. So, if I was to look for momentum opportunities, it looks like the greatest momentum is building up here in electric utilities. So, if you get in electric utilities, and now you look for stocks, okay, that provide that opportunity of rotating down. So, notice how, for example, AEE, right, just rotated on today's trading session. And, if you were to get into this particular stock, and now you double click and you get the stock, so now you can see that on the chart, okay? And Again, of course, now you can apply the UFOs, you can apply any other trading technique as well to be even more precise. But overall, you got to that stock because you are looking for a particular effect of momentum by looking at the rotation on the group. And then, sorry, let me rephrase. You are looking at the rotation on the sector and then the group, and then you went to find the stock. Okay. So now, before I keep going with strength, let me answer Joe's question. Okay. So for that, I'm going to move to a daily time frame. And inside top, there is a tool, if you go to add study, which is called the DT trend, right? So when you enable DT trend, which could be applied to the symbol, the group, or the sector, and it could be medium trend or long trend, well, isn't this the same, right? So what do we get? Well, if I look at medium trend, symbol, and I click OK, so this is going to give us the strength for the S&P. So notice if I go back to the S&P, right, and I would like you to focus on this only, okay, on that one. So if you look at this, and more specifically the one on top, right, isn't this the same? It's exactly the same. Okay, it's exactly the same. If instead of medium, I was to look at long term, we get this, which is exactly the same as this. Okay. Now, if instead of an SPY ETF, you are looking at a stock, for example, let's look at Apple, right? Apple. Okay. So we look at Apple, and actually, let me do it backwards instead of trying to find Apple here now, which of course is going to be in technology and so on. But I don't know, let's pick oil and gas, for example. And then I'm going to look at PBR, right? So if I look at PBR, okay, if I look at PBR, which is right here, so what do we have on the long term? Okay, PBR long, we got this, correct? If instead of long, I look at medium, I get this, which is this. Okay, it's exactly the same. Now, if instead of PBR, the stock, I look at the group, okay, which is oil and gas integrated, I get this, which is this. Okay, and I'm not going to do it, but if instead of medium, you look at long, you're going to get that, right? And if instead of looking at the group, I look at the sector, which is oil and gas, medium, I'm going to get this, which is this, as you can see, right? So this is where the information is coming from. And the difference between the concept of strength and the concept of rotation is basically this, okay? You went from below to above, or neutral to above in this case, or you went from above to below. Obviously, when looking for momentum, that's what you're looking for. Okay, this kind of indication, okay, where somewhere in here you would know that stock got momentum to the downside, and finding opportunities to short would probably allow you to make a profit here, another profit here, maybe another profit here, again, depending on your trading style and techniques and time frames and everything else. But at this moment in time, you have a rotation, which means that not only you went from an uptrend to a downtrend, you actually changed the strength. Okay, this particular tool, okay, it's also the tool that just to make sure, Joe, you understand where this is coming from. So when we are doing non-directional trading, right, and you see me scan and I go for neutrality, and you see me all the time go to daily neutral, okay, and weekly neutral, okay, and I click scan, right, and I get whatever. Well, actually, I didn't check mark, okay, so we're not going to get anything. But anyway, when you scan here, okay, you get, it's not exactly the same based on a different tool, but you get a similar type of understanding of what the market is doing. Okay, so if you look at another tool that we have explored in the past called the Tom strength level, and then click OK. So neutrality is this. Okay, this. And when you look at it, okay, we're talking about this. Okay, now here you're gonna be like, oh, wait a minute, it's blue. How can that be neutral? Well, because what happens is that this tool here below, it's normalized utilizing ATR projections and pretty complex calculations. So even though there is some movement to the upside, if you look at the chart above, the movements to the outside, are showing an uptrend, but the strength level is not powerful enough, and that's why here it shows as neutral. All right. So again, we are talking about the trend component in our group rotation tool. We are not talking about the strength, which is something else that we use for example, non-directional trading when we do scanning of opportunities with the matrix. But at the same time, when we are dealing with a rotation case, okay, these rotations, okay, actually this is not a good example of rotation because it went to neutral and back to blue. This here, for example, okay, so this case of rotation, notice how it went from above to below. So again, there is a lot of similarity. Again, the analysis is different. Yeah, I'm not sure if it's helping that I bring another tool to the conversation, but what I'm trying to say is that the visual representation of the Tom strength levels is definitely different compared to those little mountains that we see here on the group tool. But somehow, under the concept of rotation, there are similarities, because for a rotation to take place, you also need a level of strength to kind of be broken in the opposite direction, and that's why I was calling it momentum. Okay, so I'm playing with the words here, and while hopefully it makes sense, I may be a bit confusing, so let me clarify. I use the word strength, I use the word trend, and I use the word momentum. Those are the three words I'm using, where we only have two buttons, rotation and strength. So that's why I'm saying that while my explanation hopefully makes sense, I may be confusing you a bit. So let me re-clarify this so everybody's clear. So when we are looking at rotation, so we are talking about strength, but we are talking about strength that is happening in the opposite direction. Okay? So we are not talking about strength from the point of view of a level 1, 2, 3, 4, because this is normalized based on ATRs. We are talking about strength in a particular opposite direction, and therefore I'm calling that momentum, because for strength to break, change direction, and become strong in the opposite direction, so I guess that you are with me that it's fair enough for me to call it momentum, right? So, and then the concept of strength that we have here by itself, okay, it's the concept of strength in the context of a trend, okay, which has to do with a particular directional continuous movement into a particular direction. So that's why I said that we are looking at two big types of trades when using the group rotation tool, which is traders looking for momentum opportunities in a specific direction that would probably filter out or sort the opportunities based on rotation. So you are looking for that rotational component, expecting this to then continue in that new direction, where the traders looking for strength and sorting based on strength, they are probably trying to rely on something that is proven to be happening, and therefore expecting it for it to continue, not only to show momentum now and let's see if it continues or not. That's rotation. Strength is something that is proven to be happening. Of course, the fact that it's happening doesn't guarantee it's gonna last forever, but the fact that it's happening is certainly something that is indeed factual, and therefore may lead to a bit more confidence and reliability on certain trades, especially if you plan for your trades to last longer. So hopefully this completed my explanation here of those two buttons and why to use them and when to use them, and what type of traders those buttons serve. Okay, I'm going to take a sip of water. In the meantime, I would love it if you could confirm on the chat box that so far you are with me on the functionalities I just described and that they made sense to you, or maybe you have questions. So this would be a great time for you to mention such questions. So I'm gonna check the chat box in a moment. In the meantime, I'll go back to where I was at the very beginning. You know what? Let me close the tool and let's reopen the group tool. So it's kind of like back to beginning of the conversation, and I will add a bit more. Joe, all good? Okay, thanks for that. Anyone else in the session with me now? Please do not be shy. I guess no need to say you guys know me. You are attending regularly, but at the same time, this may be a new tool to you, and you may be like, okay, I don't know what to ask. I'm not sure when I ask this or not. Do not be shy. Any thought that crosses your mind, let's clarify it. We are live here at this moment in time, so this is a learning session, isn't it? Mark, I am thinking about how I might use them. That's a good point, Mark. And again, this is indeed the purpose of this session, is to teach you how this works and how to use it. For sure, this conversation may open up ideas on how you can use it or how you can improve certain rules of your trading plan and so on. At the same time, I also want to make a point, which is maybe you are not using group rotation. And guess what? The fact that we are talking about today doesn't mean that you have to use it, right? Because the platform has so many other tools that could be used to plan your trades, or maybe you are using a specific trading plan that does not involve checking all these added information I just mentioned today. And again, you don't need to kind of like force the group rotation tool into your trading plan. Now, for sure, and also especially given the fact that you can go back in time and do some back testing with the dates and everything else, so you could certainly play with it, and I'm pretty positive you will find value here and there in multiple applications. So if you were to find that, for sure, you can do it. You can add it to what you do, and certainly it can help to make your trading plan better. But you don't have to, right? So this is something that I realized some time ago, that often we run coaching sessions together. And I've seen some of you in the past, I'm not saying everybody at all, and not even a large amount of you guys, but I've seen some of you in the past to kind of assume that everything I'm being explained, I have to use it. It's not the case. Remember, I always use the term to be pragmatic. And while we have many tools in the platform that could be used in different ways, it doesn't mean that you have to use them all, because that would not be a pragmatic approach to trading. You would become a little bit of a slave of technology and the markets. And again, the idea is to understand well the tools, you play with them to understand what they do for you. If they serve you well, go for it. Make them plan your trading plan. If they don't serve you well, or the other tools serve you better, you can just go ahead and ignore them, okay? Because of course we can analyze and look at market data from many different angles, okay? Cool. Mark, using the metrics with this in it makes more sense. Yeah, I get you. That's why, really, because we could certainly, let's say your trading routine is you come here, you look at the markets, whatever, and once you know what's your bias, what's your plan for the day, whatever it is that you do, you come in here and you're like, okay, let's sort these based on strength. And now that I have it based on strength, let's look at the groupings. And now that I look at the groupings, let's sort based on strengths again. And now I'm like, okay, call seems to be the one. So let's get into call. And then you're like, okay, now let's sort based on strength again. Now it's like, you know what? ARLP is the stock for me. And now you come in here and now you're like, I'm going to do this. So let's say that's your way on how you find market opportunities. You know what? That would probably be quite powerful. But at the same time, these probably would also be quite time consuming. Now, you may be a person who enjoys doing it like that. You may be a person who has plenty of time in front of you and you love to do it like that. So then that's the way to do it for you. On the other hand, you may be a very crazy busy person with no time to do this, or maybe you don't enjoy having to go one at a time. You just prefer to, in a way, have a tool that builds the list for you, or just gives you the candidates automatically. That's the matrix. So, Mark, you make a lot of sense, okay? But at the same time, using the matrix without understanding the group rotation tool it's perfectly valid, but at the same time, I guess that through understanding the group rotation tool, and that's why we're covering it today, probably it helps you to understand a bit better what you do with the matrix when you filter out, and also building a bit of extra confidence in the trade setups that you find, because in the end, we are human. And while you can do extremely smart filterings using so many tools out there, maybe your trading routine implies that you use 5 different websites. You get a list of stocks from website number 1, then you filter out by website number 2, then you filter it out by website number 5, and then you come to top with that list of stocks and you filter it out again. And you are supposed to have this amazing list of stocks. But if you don't know what's happening behind the scenes, when certain stocks are filtering those stocks for you, when certain websites are filtering the information for you, it's either you just believe on them and you go with it, or if you are a bit more scientific or analytical, like, for example, I am myself, so then you will never have confidence enough to take those trades because, you have been given those stocks, but you don't know why. So that's why I'm going deeper into the group rotation tool today, so you understand better what this tool is doing for you. So then when you filter out stocks with the matrix and you get those results, you also have a certain degree of confidence, and that will allow you to trade better. Because, my friends, when it's time to click the button in trading, it's time to click the button. And if you don't act on time, you miss the trade. And acting on time, it's directly related with how confident are you with your trade setups. So that's, again, a simple, in a way, conversation to have. On the other hand, is huge, right? Because missing trades is certainly not a recipe to do well, okay? Josip also did a session using the group tool about 2 months ago. Yes, I do remember that, Joe, absolutely. And he gave you a little bit of his twist and flavor and preferences, which are certainly very much compatible with what I'm covering today, because in the end, I guess that using this tool properly or not, it's what it is. And obviously Josip uses it properly. But at the same time, I'm sure that there were some specific approaches or comments he made that probably were very enriching as well. Very good. Yeah, Mark, reading your comments. Cool. Okay, so now, again, so let's say you look for rotation, let's say you look for strength. Probably this is your starting point, okay? Once you have this sorted out, then you will want to get into the type of opportunities you're looking for. So, for example, let's say you are looking for sectors. Let's say you're looking for opportunities, okay? And this is now kind of like using common sense, okay? So let's say you're looking for opportunities. You have seen me in many option sessions talk about opportunities where you get into selling 2 times bull put spreads, right? When you sell a put, you buy a put below price, you do it 2 times. You get credit, and with that credit, you either buy a call, or you buy a call spread, or you buy a call a butterfly, right? Depending on the type of opportunity. So when doing these type of opportunities, typically we are doing when there is a stock which is falling very badly, hard to the downside, and then that stock, if you project with the speed bump tool, right? If you project, there is some sort of a speed bump zone where the puts are, and on top of that, we got UFOs, 1 or multiple UFOs there, right? So then you would love to sell those puts there, and then we're expecting that if the market either go up immediately, or if the market goes back down into that zone, from there it's gonna go back up. And this option structure with the 2 bull put spreads below and the calls above are gonna pay well. Well, if you were to look for opportunities of that sort, okay, again, here's a possible application. So you may look for, you may add the long-term analysis to your equation here. And what you would do is, again, sort based on strength. Okay, so the one that seems to be, wait a moment, I was not looking at the US market. So sort based on strength. Okay, and you can see that in the sector of technology, while long-term is still blue, short-term is red. Same happens with industrials. Okay, you got the blue and you got the red. Okay, you got the blue and you got the red. You got the blue and you got the red. Right, you got the blue and you got the red. So you got many cases where long-term, there are market conditions that are likely going to be supportive of a market going back up. But in the midterm, there are certain sectors that are really being hurt pretty badly, right? So what can you look for? What kind of setup can you look for, right? Well, first of all, to see a long-term scenario that is either going up or more or less flat would be good. Of course, those two are good, but also is blue above, so you're not going to find those stocks that are falling. That long-term is going down, so not a very good idea. That one is quite flat and is going down. So I would say Beijing Materials could be a very good candidate. That one is going down. That one is going down. That one is down, kind of flattish. I'm not sure if flattish is a proper English word. And this is going down a bit. So similar to Beijing Materials without financials. Okay. This is going down a bit more, and this is going down a lot with technology. So I would trust it less. So financials of Beijing Materials could be the sectors where I would be inclined to look at their groups and do the same now, sort based on strength. Okay. And again, I'm looking at blue and red. So we got red, but that I would not be happy because there is momentum to the downside here, right? Where those have been in the red for longer. Okay, now the problem is that this is going down, this is going down. So the ones that are a bit more flat would be this one, and it's been dropping for a while. It tried to go up, but it never went to blue. So insurance brokers look quite interesting for me to do this kind of application. So now you will get in there and do again the same analysis with the stocks, right? And so here we got flat and up, so that doesn't work. This is kind of flat. It's been that one is pretty okay. Aeon, okay, because while it's been neutral, it never went to blue. That one is flat but dropping a bit. Okay, so not so happy about it. I would kind of prefer Aeon, even though MMC is okay, and definitely that one not, because on the long term is red. So let me take a look at that stock, and you will see what I'm trying to say. So that stock, has been dropping. So if you were to look at the speed bump, right, and then you were to look for UFOs on the daily time frame, we don't have it, but maybe on the 2-day time frame, we have UFOs there on the 2-day time frame with 57% probability. So guess what? You could get into selling puts at 260, 2 credit spreads, and then buy calls above, right? And what's the beauty? That again, if that stock was to fall and comes here, it's very likely going to go back higher, and your structure is likely going to pay. And what is supportive of this market opportunity here is the fact that both the groups and the sector have a long-term strength, which is blue colored. And what is very nice to see as well is that on the midterm is red, which you will be like, why is that nice? Well, because if it's not red on the midterm, that would mean that the stock has not dropped significantly. And if the stock has not dropped significantly, so having a significant turning point in the opposite direction is probably not going to happen. So again, I don't have a crystal ball, but for example, if I was to look at that guy, AGAGAJG, so difficult to pronounce for me. So you can see how, while it's been dropping hard in the last trading day, overall, that stock didn't go anywhere. It's kind of like a sideways market, right? So where to do this type of opportunity, you want to see the market to be more exhausted to the downside to be able to do this kind of trade. Okay, you want it to be exhausted, but you also want the sector and the group to be supportive of that stock going back up, because if the group then rotates back up, and then the sector rotates back up too, and you were in the trade before all of that happened, then this trade is going to be very powerful. Okay, so again, you could certainly use common sense to look for combinations of strength and rotation with the midterm and the long term that are supportive of the type of trade that you are planning to take. Okay, just to give you another idea, another supportive condition could be looking for groups that look quite flat, both on the long term and the midterm. Okay, so in this case, I would say this and this is quite flat. Okay, you have blue and red, and it's quite flat. If I was to get into industrials and I look at the groups, this is not too exaggerated, and this is going down a bit, and this is going up a bit, quite flat. Yeah, it's probably the flattest of all. So aerospace and defense. And now when you look at the stocks inside here, okay, so the idea would be to look at the same. So now this is red and red, so not ideal, but it's also quite flat. And you will see why I'm looking for flat in a moment. I didn't say it, now that I'm realizing it. Yeah, this is probably the one I like the most from the setup point of view. This is also quite flat. So TXT. Yeah, I kind of like this one better. So if I go for TXT, okay, so notice what's happening with that stock. What is the price action that we're getting here? Is sideways. So in other words, maybe you want to explore the world of non-directional trading. Maybe you do iron condors to that stock. And what's the beauty? The beauty is that if that stock tries to move hard in one direction, guess what? Because the midterm is flat and the long term is flat when it comes to its group and its sector, okay? Beyond the fact that the stock is trading sideways, obviously, but its sector and its group both are also moving flat. So the energy built in that group and sector is basically non-existent. And probably if there is a price swing in one direction, you may see the same price swing in the opposite direction like 2 or 3 days after. So that increases the odds of the stock to go nowhere, and therefore for those non-directional trades to be profitable. Now, scanning like that has a little bit of subjectivity, obviously. Okay, that's why I personally prefer to use the matrix. But certainly, and as we said before, it's also a bit tedious, but certainly, with a little bit of time and research and knowing that some days you may not have a trade, certainly this particular approach to looking for opportunities could certainly pay well if you have rules around and you look into this carefully. And again, you are certainly looking at the stock from a point of view which is beyond the stock. You're looking at the stock from the point of view of what's the group going to do to that stock and what's the sector going to do to the group and therefore to the stock, right? So you are adding forces from other dimensions to help the trade to either move in the direction you want or to not to move in any direction. And certainly this tool it's absolutely amazing and very powerful at doing that. Okay, cool. My friends, that's all I've got for the group tool. Okay, this is all I got. Certainly happy to look at your questions. There is a question there from Mark on the chat box. Feel free to add more. I'll take a sip of water, Mark, and I'm going to give you an answer. So, Mark, volatility scans in the matrix might also find this stock, right? When you said that stock, I'm sorry about that because I think you typed that 3 or 5 minutes ago, which I'm not sure if I was looking at the non-directional opportunity or it was the directional opportunity. So I'm not fully sure about that. But if you remember the type of the name of the stock, that would help me to remember. But in any case, I think that I do have the answer to your question, even if you don't remember the name of the stock. Notice when we look at the additional filters and we look at stock filters, notice that what we have here is the group. Either the group rotation, if you check mark rotation up or down X amount of days ago maximum, or you look at the strength, either midterm up or down, or long-term up or down. But notice how keyword, it talks about the group. It doesn't talk about the sector. Okay, it doesn't talk about the sector. Okay, why? Because to be honest, it would be a bit too complicated to filter for so many parameters. And also because, to be honest, the group is a bit closer to what the stock is going to do than what the stock sector is. Okay, certain sectors have many subgroups. So when building the platform, it was considered that filtering out of using groups and not sector was more efficient. Okay, but now let's say you tell me, well, wait a moment, Jose, but to me the sector is critical, it's part of my trading plan. So maybe a quick way to do it would be you come to US stocks, you do your either rotation or strength analysis, and you conclude, okay, I want to use telecommunications only. So what do? You come here and under sector and group, you select telecommunications, all telecommunications. And now that you got telecommunications, when you filter based on this group, it's going to be groups that belong to telecommunications only. Okay, so that's how you would handle it if you wanted to be that picky. Nothing wrong with being that picky. At the same time, being pragmatic is often better, and that's why we ended up with group here, and we didn't add sector, even though you can work on the sector from the upper drop-down menu. Okay, good. The directional one. Okay, great, get it. So I guess that I just answered your question, Mark. Wonderful. Yes, and I see your confirmation. Good. Joe, the one you pointed out as trading flat, but unless it's a penny increment, which is the least you use, it won't show up. Yes, you are correct. I mean, and again, I just talked about being pragmatic. So I use the penny increment options list out of being pragmatic and not having to struggle too much with problems with options liquidity or getting filled at a convenient price. And also is a list of 200 plus securities, so I make my life a bit easier by that. But the reality is that there are very good opportunities outside that list as well. Okay, actually, there are many opportunities with much more price anomalies that you could find if you don't use the penny increment options list. Okay, now you find those opportunities. Then when you go trade them, some you have to give up because liquidity is terrible, or some you have to give up being filled in the midpoint of the spread and take 5, 10, 15 cents less or something like that because they don't trade in pennies, they trade in nickels, right? So it's it gives you less advantage, but you find greater advances at times by finding a greater level of price anomalies and therefore certain strikes providing extremely cheap options or extremely expensive options that you will not find in that list I'm using. So when trying to be pragmatic and using that list, what I mean is, number one, spending less time fighting for liquidity stocks. Number two, getting less often people in trouble when it comes to getting into stocks where then you get killed on slippage on the way out, or when massaging your trades, when doing rolls and things of that sort. So that's what I mean by being pragmatic. Another way to think of being pragmatic is find the best opportunities, the most unique, rare opportunities in the market, and those are going to be very few. And well, guess what? If you don't use that list, you would find those, which is another way to be pragmatic, which contradicts the first way to be pragmatic. So again, it depends on your definition of what pragmatic is, which basically brings me back to your trading plan. So what is your trading plan trying to do? What are your rules? What is the type of trades you're looking for? So that would imply that you may want to pass on using the penny increment options list. I always use in the option sessions we do, but I don't always use in my trading because there are certain type of market opportunities which I prefer to be a bit more open to rarity instead of this purist approach to penny increment options, liquidity, all of this. There are certain type of trades that I'm open to spend a bit more time on them in exchange for more rarity, okay, if you know what I mean. So that hopefully answers your question, Joe. Got you, Mark. Perfect. Okay. Jeff, can you see something like this on TOS? I do not think so. What I would advise you to do, Jeff, or anyone who is not using top, it's for example, you could get to the website here. Let me give a moment. So you can Google ETF select SPDRs, okay, and get to this website, sectorspdr.com. Okay. Okay, and here you have a list of, it's also 10, very relevant. Actually, I think it's 11 because the other 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, correct. So yeah, so maybe you want to ignore real estate, for example, okay? And if you know real estate, so we are basically talking about almost copy paste of what we have in top. So you can focus on those ETFs. You can chart them on a chart. Of course, it would be more tedious one at a time. And then you could apply auto climate, for example, and by comparing the auto climate readings of each of those sectors individually, you would get a measurement, and using a daily or a weekly time frame, so you would get a measurement similar to what we get inside top by doing that. Okay, this could be a workaround for some traders not utilizing top. So this could be a workaround. Okay, but I would not think that there is a tool in TOS to do that automatically. I mean, with TOS, one thing you can do, I mean, you don't have auto climate on TOS, so I would suggest to do TradingView. But both on TradingView and TOS, another thing you could do is to create a multi-symbol chart, where in one chart you can have all those 10 ETFs, okay, the Select Spider ETFs, you can have them all on the same screen. And then visually speaking, you can also compare performances. Now, that's going to be more subjective versus applying auto climate. So I would say that's probably the best way to do it. Cool. My friends, absolutely perfectly on time to conclude the session today. Amazing timing. So I guess we'll say goodbye. As always, it's been a pleasure to spend this 1 hour with you guys. And also, I didn't mention it, but super, super happy, big smile on my face today, because it took a great level of effort. But as you can see on the bottom part of the screen, we have finally launched our apps for NinjaTrader. So we'll certainly organize soon a proper webinar, presentation, etc. But for the ones of you, especially if you're trading futures or you're trading intraday, or just if you want to take a look at Ninja, so you can get Ninja for free on the Ninja website. It comes with delay data. The free version is with delay data. If you want to have real-time data, is either you need an account or you need to pay for data. But with delay data, it's free, and you can certainly play with the platform. And if you use the coupon code CLAIM8, you can also get your auto climate for free. And then you can also do, Jeff, the analysis of those markets with Ninja, which is by far way more powerful than TOS for charting, and way more powerful than TradingView as well. Ninja is really it's a pretty interesting piece of software. Okay, so then you add the UFOs and the climate there, and it's certainly cool. Of course, with delay data, which is the free version of Ninja, so it would not be the best in the world, but again, delay data means 1 day delay, which for long-term trades is certainly good enough. Okay, and of course you can look into real-time data as well if that was needed, depending on what you trade. Okay. Anyway, everybody, you take care, my friends. See you soon. See you next week in the trading sessions, and keep up the good work. Take care, my friends. Bye bye.